markets, equities, etc. work. And then he fell into the other aspects of Bitcoin. Now he's able to apply all he knows about how to evaluate markets with what he's since learned and is continuing to learn about Bitcoin. So he's got a multifaceted weapon in the fight for Bitcoin. Yeah. And he's graciously joining us, looks like from home back east. And so he's a little later for him. So let's not waste his time. Thank you very much for joining us today, sir.
It's all good. Thank you. I already started streaming, actually. So we should be all good to go. Yeah. Is the floor mine?
The floor is yours. Thank you.
Excellent. Hey guys, thank you for coming out. I've been meaning to come up to Seattle, but looks like you guys got me remote for now. I'm sure I'll make it out there one of these days. And I am going to do a little presentation. I've done this presentation a couple of times. I used to travel the world and do a presentation about the importance of Bitcoin from an economic perspective. And then with this latest ICO craze, I decided to do a little of a focus on the comparison between ICOs and IPOs. I don't know how many people have seen this presentation. I am live streaming it. There's always a big debate. Do I want to live stream my presentations? I only have so many presentations. And if people have already seen it, will they be interested to coming out again for other events that I speak at live? And they probably will. So it's okay. I'll stream it. And the next time I do this presentation, I'm going to alter it some to make it even better. So let's just jump right into it. I'm going to do screen share. How many of you are familiar with my work? Actually, how many of you are not familiar with my work, I should say? Raise your hand. Oh, okay, I got a couple of new people. Excellent. I started out in the crypto space in early 2014. That's when I became public, started speaking at conferences, appearing on YouTube channels, until I eventually got my own YouTube channel. And that's been taking off, and a lot of people have been following me. Speaking gigs keep getting bigger and bigger, and it's great. I really enjoy travel the world. And one of the things people follow me for is for my price of Bitcoin predictions. Some think I've been great. Some think I'm the worst Bitcoin predictor in the world. But that's what happens when you publicly try to predict the price of Bitcoin every day. I let other people decide. I just continue to do my thing. All right. So let's jump right into the presentation. Can you guys see that on your live screen?
Yes.
Perfect. All right. So this presentation is called The Inevitable ICO Bubble. I can still see the camera on you guys. How many of you in the room, just by show of hands, are somewhat interested in ICOs? It's okay. You can raise your hand. No one can see you on the live stream, by the way. They only see me. They don't see you raising your hand right now because I'm doing screen share, and only the one that's speaking is in the little corner. But to me, these ICOs are basically IPOs. I didn't see any difference. And a lot of these ICOs, all they're doing is they're just going public. And that part did not really make sense to me, that these companies that have no clients, no revenue, not even barely an idea, and somehow they're being funded up to millions of dollars. And that reminded me of the old IPOs back in the late 90s while I was still in university. And I was also being bothered by everyone that was reaching out to me for to be an advisor of all of their ICO initiatives. So I had to change my LinkedIn summary to the following: I'm not interested in your ICO or token sale. Please send all requests to Vitalik Buterin instead, who is responsible for this nonsense. To know why your ICO or token sale is probably a scam, my consulting rate is 0.1 Bitcoin per hour. I will be happy to explain it to you. I actually taken a few of those phone calls, and I have since stopped. Oh no, for some reason YouTube isn't displaying color. I don't know why that happens. Hold on one second. Stop sharing, and then share it again. All right, guys, in the live chat, I hope you have color this time. Just let me know. And we'll go on. So I don't really do consulting calls anymore. I just find that to be not the best use of my time, spending 1 hour talking to one person, unless I can start like maybe live streaming some of these consulting calls. Then it would be more interesting, because I really am doing this for the community. I want the maximum amount of people to get an understanding of the crypto space and Bitcoin. And that's my number one priority. That's why I stream so much, pretty much once a day. So on the screen, you see the history of the NASDAQ pricing bubble, and you can see how it peaked in March of 2000, and then it got back to its all-time high in 2015. So it took 15 years to get to the high. It took 2 years to put in a low. It took an additional about 6 or 7 years to put in a secondary low in the '08 crash. And then eventually we made it to a new all-time high. More specifically, NASDAQ fell 78% from its peak on March 10th down to its lowest point on October 9th, 2002. So it took just over 2 years, took about 2.5 years to go from high to low in the NASDAQ crash. And a lot of these bubbles, they pretty much fall in a very similar way. We can also talk about some of the highlights that took place during the dot-com bubble. Yahoo was one of the first major companies to go public. Yahoo did amazingly well on its IPO. It went up 50% on the IPO and closed at $33. So Wall Street projected an open of the price, the initial IPO, when the company was now able to be traded by the general public. And it opened at about $16, and then it closed that day at about $33. If you split adjust that, it only comes out to about $1.38 in today's price of Yahoo. About a year later, not even a year later, about 8-9 months later, Alan Greenspan called this irrational exuberance, and that people were getting over hyped on the whole .com thing. Clearly, he was way early. He wasn't wrong, but he was early. Amazon was the next great IPO. That one gained 31% and closed the day at $23. If you split adjust that, that comes out to about $1.50 in today's terms. We'll get to pets.com a little bit later. But those were the two really good, notable companies. Let's talk about some of the more interesting companies that didn't do so well. Oops, I might have zoomed in a little too much. The globe.com. I don't know how many of you are old enough to remember the globe.com. I barely was. And I definitely read about it. Now that all of these .coms are going public, people are coming up with more and more creative white papers. More and more creative websites in order to entice unqualified investors during the IPO process. One of those was the globe.com. The globe.com was a website for websites, just, again, very similar to the current ICOs. And the website for websites, where you yourself is pretty much a website, you build your own world online, that stock went up 606% on the first day of trading with the public, and the stock closed at $63.50, going up 600%. That was the record at the time. So here's the Globe. In 1998, there were plans made to take the company public, and everyone became millionaires overnight. At the end of the trading day, the company had, broken that record. It was 3.1 million shares, and the founders of the company were worth close to $100 million each. If you look at the next part in red, in 1999, so 1 year later, basically, Global.com, the stock price got hit. Investors grew increasingly skeptical of the new economy share. It was all about, the sharing economy as well back then. Nothing has changed. Prices declined. It hit a high of $97, and then eventually the stock went down to 10 cents. And if you look at the very last line in the slide, of course, it ended in 1 million lawsuits that plagued the company. Let's talk about another marvel of innovation, VA Linux, an IPO that opened at $300 a share. The close that day was 700% above the expectation. So it was supposed to open at a certain price, but basically that day it traded as high as $299. Here's what VA Linux did. VA Linux was basically the Dell of Linux. They would make you custom-made Linux machines. And the price was supposed to be $30 a share, but instead it pretty much, the first trade was at $299 a share, and it closed the day at $240 a share. You can see the price chart in red, and all the price did was nothing but down since the very first trade. Eventually, the stock traded down at $7 from its $300 first trade, and the company eventually disappeared as well. This one I actually remember. It's one of my favorite companies at the time. This was great. It was Cyber Rebate. I actually used Cyber Rebate. Here's what the company did. The company sold items at grossly inflated prices, as much as 10 times the listing price of an item, but then promised customers a 100% rebate. The company relied on the assumption that 50% of the customers would neglect to apply for the rebates. And that's pretty much, that was their business model. Their business model that people weren't going to ask for their money back. The company blew through $80 million in funding. I don't believe this company ever went public. I don't believe that they did. But this was these were some of the bright ideas that people funded up to $80 million to do. And of course, it ended with lawsuits, and they owed 9 customers almost $100,000 each because they were going to use that company. Eventually, people got paid back 9 cents on the dollar. So people lost 91% of the money they invested. Now, not all of it was bad for everyone. Just like with the ICO space right now, if you can get out at the top, you will do very well. And here's an example of getting out at the top. This is broadcast.com. Broadcast.com initially started as a different company, but in 1994, they got a $10,000 investment from Mark Cuban, who bought into the company for a 2% stake in the company with $10,000. They changed the name to AudioNet because, and Mark Cuban's reason for investing in this company, he wanted to bring radio on the internet. And for him personally, he really loved basketball, not a surprise, owns a basketball team. And he really wanted to listen to his Indiana University basketball games on the internet. And he bought in and was, a better leader than the rest, convinced the creators of that company to let him be in charge. Basically, he took over the CEO role of that company, and in 1998, rebranded again to broadcast.com and took the company public. So his $10,000 investment made him $300 million as the company went public in 1998. In 1999, Yahoo bought out the company for $5.7 billion worth of Yahoo stock, making Mark Cuban a billionaire. Mark Cuban pretty much cashed out, and he cashed out at the very peak of the dot-com bubble. Yahoo then shut down broadcast.com in 2002. So there it is, cashing out $1 billion on a project that eventually got, delisted and not used. Yahoo discontinued broadcast.com in 2002. So that's an example of cashing out on top. And man, the amount of the amount of interesting companies during the dot-com bubble has no bounds. This is great from Wikipedia that does a good job naming some of them. And there's just the similarities between the IPOs and the ICOs and the current environment is really amazing. Here's an example of eDigital Corporation. All eDigital Corporation did was change their name to eDigital. They did that in January 1999, and the stock went from 6 cents per share to $2.91 per share that day, or immediately on the name change, and then eventually reached a price of $24.50, all because the company changed its name to eDigital. The SEC didn't like that very much, and that's probably why the SEC got involved last year in August when a company decided to change its name. So here's a case from the Securities and Exchange Commission. The commission temporarily suspended the trading of securities of a company, CIAU, the SIO group, because they basically changed their name to something to do with blockchain. And you can see how their penny stock, which was worth almost nothing, soared. And then, of course, it crashed because they had nothing to do with blockchain. There was a more interesting case, and I'm wondering what's going to happen here. The Long Island iced tea company became the Long Island blockchain, and their stock also soared from being about $1 all the way to $14, just because they named themselves blockchain. And here's an interesting comment from, I guess, one of the experts that they quoted for the Bloomberg story. It's so reminiscent of what happened in the 1990s. Scott Nations, author of A History of the United States in 5 Crashes, said by phone. A company that had nothing to do with the internet would put out a press release that they were going to become an internet company now, and all of a sudden their stock would soar. That's exactly what happened to the Long Island iced tea company, all by adding blockchain into its name. I'm not sure what the SEC is going to do about that. So now, again, this is a debatable topic. I mean, should the SEC be involved? Should a company that has, an iced tea company stick the word blockchain in their name, have the stock soar, 10 times that day, so that the insiders of that stock, the ones that told their friends, hey, we're going to change our name and our stock's is going to pump, or the CEO of that company, and all of a sudden, all the insiders sell that stock on a 10x valuation, knowing that it's going to crash. This is the SEC's job to make sure that people that do that, get held accountable for scamming the mom and pops or the unqualified investors that are going to rush in and buy it. Now, again, this is very debatable. People will say, hey, well, they're stupid for buying this stock based on a name change. But what happens when everyone's doing it? What happens when every company is changing its name? So again, it's a debatable issue. Let's talk about pets.com. Pets.com is usually the laughing stock of the .com crisis. I don't see it that way. Pets.com went public about a year after Amazon.com went public. Pets.com IPO opened at $11. Who could have known that Amazon would be one of the world's biggest companies and its CEO became the richest man in the world just the other day, and or at least the richest man in America. And Pets.com is a laughing stock. It could have been the other way around. Pets.com and Amazon had exactly the same business. They started out selling one type of product on the internet. Amazon started selling books. Pets.com started selling pet supplies. They could have rebranded their name to be something a little more generic than Pets, and they could have branched out to selling other products on the internet. They were exactly the same company. Do you know who also did not know which of these two companies was going to succeed? Amazon. When Pets.com was going public, the biggest investor in Pets.com pre-IPO was actually Amazon. They held the biggest stake in Pets.com. So I guess you can say Pets.com was like their pet project in case the Amazon brand doesn't take off, because even they didn't know if Pets would have been a better starting point for online sales. So there you go. And this gets into the discussion. And I really hate these statements from people that say, how come only the rich get to participate in speculative initiatives? And this is why. Because even people at Amazon.com did not know if Pets.com was a better company. If they knew for a fact, they wouldn't be the biggest investor in Pets.com as the company was going IPO. Because, look, it's a professional job to be a VC. Your job, your only purpose in life as a job is to make sure you are investing in companies that are going to succeed. And these VCs, on average, do not outperform the S&P 500. They do not outperform the companies that have already succeeded. And then you have people standing on stage talking about how people with almost no money and no experience in investing should invest in speculative ideas just because of a white paper. And it's very, very frustrating because the average person has absolutely no qualification of investing in any company at its seed round. Here's another way to look at it. I'm sure every single person watching this or listening to it at the Seattle meetup, I'm sure every single one of you has some relative that every couple of years is asking you for money for his idea. And you laugh at him and reject him. And I guarantee you that that relative of yours is probably more qualified to start his business than 99% of all of these ICOs that are doing their business. Just like 99% of all the .coms that were launching in the 90s. That cousin of yours that keeps asking you for money to start his business will probably have a higher probability of success because you may actually help him in that business because you're giving him money and you will have a say. That is a lot more say than you have and a lot more expertise that you will have than handing your money to an ICO. And that goes for every single ICO there is. Because if an ICO could actually be useful and profitable, they wouldn't be doing an ICO. They would either do it as a grassroots movement like Bitcoin did, or they would borrow money from qualified investors. But they don't want to be held accountable for what they're doing with the money. So they get that money from unqualified investors. And that's kind of how it goes. So what happens after? Oh, and a lot of these initiatives, even like with Bitcoin today, none of it is new. It's all been done before. It's been done before to the point where even online currency has been attempted in the past. Here's a commercial from 1999. Hopefully it'll play. I'm not sure why it's not.
It's not acting like an embedded link.
That's unfortunate.
Reload the tab.
Oh, man.
Jigger the tab.
Maybe. Let me try again.
It's not acting like a link.
Oh, that sucks. Oh, I think I know why. Sorry, guys. Hold on one second. Let me exit this. I was in a slightly different present mode. That's probably why it's not playing. Always technical difficulties. There we go. Now it should play. Just got to get back to where I was. Perfect. Here we go. Here's a commercial from 1999. Listen carefully. And there's no audio. My bad. Man. Full of technical difficulties. All right, there it is. Got it. Huh. Now we can do it.
Gotta get a gift for kid. You don't know what they want because you're old, honey. Give them Flu's online gift cards. It's just like money. You send it by email, they spend it at some of the web's coolest stores, and you come out hip and smart. Congratulations, Ben.
Flu's was internet money before Bitcoin. That's exactly what they kind of tried to do. They were trying to create online money. Of course, it was centralized, just like every one of the ICOs. The only thing that we have decentralized right now is Bitcoin. Flu's was the original ICO to be used as money on the internet. And of course, everyone realized it was centralized. There it is. The company attempted to establish currency unique to the internet merchants. And so what happened in 2001? Flu's was notified by the Bureau, the FBI, that a Russian organized crime syndicate was using Flu's and stolen credit card numbers as part of their money laundering scheme, in which stolen cards were used to purchase currency and then redeem it. Laviton, I believe that was the CEO, Laviton or somebody, has stated that fraudulent purchases accounted for 19% of customer credit card transactions in mid-2001. So, of course, Flu's was centralized, just like every one of these ICOs. So the moment that online currency was being used for illicit purposes, all of a sudden, boom, the FBI comes down. Just like what will happen with every one of these ICOs that you think is, can be used for anything other than for used at all in any way, shape, or form, right? Because they're centralized. They have CEOs, and the companies could be shut down. The companies that run these ICOs, and they can and will be shut down. Flu's exhausted $50 million of venture capital. Now, I don't have a problem with that, right? At least they were venture backed. At least they weren't backed by the average consumer. Another funny story from the .com days that reminded me so much of what I saw last year. And this was basically the story out of San Francisco, where somebody wrote in, if you just Google, the craziest stories you know of from the .com days, basically some guy in San Francisco had some kind of an idea, again, had some kind of a white paper back in 1999, something to do with communications, build a fancy website, and just put up a giant billboard in San Francisco. That caught the attention of an actual company that was publicly traded, and they decided to buy out his idea for $100 million. Gave him a 3-year contract to integrate the idea. After, 3 to 4 months, they realized how useless he was. So they said, hey, just take the $100 million and go. We will integrate your idea. And then the guy walked away, and he realized, hey, I didn't really have anything substantial. So how stupid is this company to give me $100 million? So he took a bunch of company and he shorted that company on the stock market, making himself another $200 million in the process by shorting the company that bought his dumb idea. All because he was able to buy a billboard. And that really reminded me of what happened at the Consensus event about a year ago, where all you saw in Times Square was billboards of EOS. So way before they launched. So I'm still waiting for EOS to end the same way as the billboard story from San Francisco in 1999. So were any people actually held accountable? And I'm sure all of you have seen the movie Wolf of Wall Street, where somebody was seriously held accountable. One of the things that he was held accountable for was taking companies public, penny stocks, taking them public. Now, I have one more video. It's very short, right there from the movie. Most people missed it, but probably the most important part of that movie. And this is why he actually went to prison. And then tell me, how are these pre-ICOs any different from what Jordan Belfort was doing? Hope this one is not on mute.
An IPO is an initial public offering. It's the first time a stock is offered for sale to the general population. Now, as the firm taking the company public, we set the initial sales price and sold those shares right back to our friends. Look, I know you're not following what I'm saying anyway, right? That's okay. That doesn't matter. The real question is this: was all this legal? Absolutely fucking not. We were making more money than we knew what to do with.
All right, did you guys get that part? What were they doing? They were setting the initial sale price, just like all of these ICOs are. I mean, the CEO of the company gets to decide the initial sale price of an asset that gets to be bought by the general public. But before they do that, they pre-sell all of these shares to their friends and family. They tell them what the initial sale price is going to be so that they can cash out the moment the stock actually goes public. That's exactly what Jordan Belfort was doing with a lot of these IPOs. And that's exactly what these ICOs are doing. They sell a bunch of ICO shares to their friends, family, insiders, advisors, popular people on Twitter. And then they set the price of at which price they're going to sell to the general public. They try to pump it on top of that just so that their friends can exit that position immediately before the company has any revenue, before the company has any clients, before the company has any kind of a product whatsoever. Other prominent people went to a prison as well, or at least were charged. I think this guy was able to avoid it somehow. This guy was actually involved in the IPOs of companies like Amazon and Netscape. And even he got nailed for doing favoritism and who gets those initial shares. So here it is. He was convicted in May on charges of trying to hinder a government investigation into whether a CSFB, the company, doled out shares of hot IPOs to favored clients in exchange for inflated commission. Again, the ICO space is absolutely no different. The similarities are absolutely uncanny. I'm going to close out this presentation. Just my realizations, because I do want to get to your Q&A. We have about 30 minutes left. I believe that in the dot-com days, one of the big facilitators of driving the dot-com bubble was the emergence of online brokers. It was now easy for a person at home with no qualifications to invest in any companies that they like. E-Trade, Scottrade, Ameritrade. Who remembers the E-Trade baby? I don't see any hands go up. If anyone remembers the E-Trade baby commercials. And so prior to the dot-com brokers, if you watch the movie Boiler Room, basically these brokers would call you on the phone and try to convince you to buy stocks, but they would only call people with money. Once online brokers came out, the actual solicitation by phone brokers started to go away. But now anyone can start trading, almost anyone, right? The taxi driver, your barber, your shoe salesman, but they still, needed to be 18 and above. They needed to have a bank account. They needed to have some money in the bank. And if they wanted to be a day trader, they needed $25,000. So even though the barrier to entry dropped a lot, it didn't drop completely. And it was still jurisdictional based, right? Like you had to be, you couldn't trade American IPOs unless you were an American resident at least. In the ICO space, it's different. There's absolutely no barrier to entry. There's no age restriction. There's no geographical restriction. There's no financial restriction, right? If you have $100 to your name, someone can solicit you and sell you a garbage ICO. And these age restrictions are very interesting. I mean, I have documented from my email. I took out the names. I think this one is watching, not 13 anymore, but hey, Tone, I'm 15 and a half years old, and he's asking me for advice on trading and when to, buy more Bitcoin. At least he's buying Bitcoin. Smart 15 and a half year old. This is a better one. I don't want to say the name. You know who you are. 15 now, but hey, Tone, I'm 13. I didn't even know. We're like texting back and forth, asking me advice on like some of the trading stuff. Again, it's the internet. And then eventually it's like, oh, by the way, I'm 13. This is what happens. This is what happens in this ICO space, right? You're opening it up, and there's probably a lot more 13-year-olds that are out there trading this stuff. So that was really cool. I'm gonna skip this. Let's skip that. Should probably remove them. Really good tweets by Alex Marcos. where he said there's one big difference between a traditional startup funding and ICOs. Founders of failed startups shouldn't come away financially enriched. He followed by saying risk capital to explore ideas is great, but incentives aren't aligned if founders make money at expense of investors, regardless of outcome. Again, you have people like Dan Larimer that are going from ICO to ICO to ICO, right? I mean, BitShares and Steemit weren't really an ICO. They were a quasi-ICO. They had the spirit of an ICO. And then and then now he's doing EOS, and then he's going to quit that one. And to me, they were both failed projects. BitShares and Steemit, they were both failed projects. And now he's just getting bigger and bigger projects to start. Here's my version of it, where I replied to someone. An ICO is a centralized scheme. It's either an unlicensed, unregistered security or some guy printing his own money. You choose, maybe a combination of both. And its only purpose is to separate unqualified investors from their money or their Bitcoin. It doesn't matter. And they're funding their, I used the derogatory term there, so I wanted to break that out. I wanted to make this a little more kids friendly. Basically to fund your dream. Bitcoin is actually decentralized, and it's being used as a currency trying to do something. That's pretty much it. This is my general view on ICOs versus IPOs and how similar they are. We got about 25 minutes, and I'll take your questions, guys, on this or on anything else. Or I can look at the price of Bitcoin if you like. I should probably turn some lights on in my apartment. Give me 1 second. I'll be right back thinking of questions.
Cool. So yeah, this is our time.
I got a question on crowdfunding. Like his thoughts on crowdfunding, just ICO model.
Okay.
Is there? Yeah.
Okay. So,
but I have a question about crowdfunding versus the ICO model. Sorry.
Okay, now I'm ready. And for those watching online, I will be giving this presentation at upcoming conferences that I go to, but I'm going to try and mix it up. I'm going to try to maybe add a couple of things. Maybe I'll speak faster. I want to get this presentation down to 30 minutes, and I have like new things I want to add to it and stuff.
So I have a question that in regards to crowdfunding versus the model versus IPOs. Like, what are your thoughts on crowdfunding? Let's say there's like a small idea that you like, and it doesn't have to necessarily be funded with a cryptocurrency, but there is an opportunity for you to invest in an idea that you like, and maybe they'll give you disclosure on that idea, like if you buy this, then you get this. So where do you see? Because I don't think ICOs are going to necessarily go away, because it's kind of like Pandora's box, just like how Bitcoin can't go away. So where do you see this going?
Right. So the crowdfunding question, right? So there's two things to crowdfunding, right? So you can have something like Indiegogo, right, where you're crowdfunding usually a physical object, right? If you're crowdfunding a physical object, what do you get for that? Well, you get first dibs on that object and at a discounted price, right? So you're funding it, you're going to get one of these or two of these or three of these, right? But the point is you have, they're telling you that they're going to build something cool. You trust them that they're going to build it, and they're going to give you that product. So do you have an expectation of profit when you donate to an Indiegogo creation of a physical object? No, right? You just want to buy a cool object that you want to use. So that's one form of crowdfunding, and that's absolutely legal, obviously, and is great. Now, the other form of crowdfunding, let's say it's an idea like even like Ethereum, right? And they're crowdfunding it. Now, this is the problem is they didn't, if they crowdfund and took your money to build the product, they could have taken donations to do it, and that's perfectly fine, right? They're crowdfunding an idea. The problem happens when they're giving you a digital token in return, because the moment they give you a digital token in return, you now have an expectation of profit because you certainly aren't buying this token to use their product. You're buying that token to flip it and make money. And that's where the problem comes in. Now you are incentivized to pump that token to other people because the more people get involved in also giving them money, the more chances you have to make money. And while I'm sure Ethereum is one of the biggest exceptions here in that you can find hundreds of people, maybe thousands of people that will say, I gave money to Ethereum, I never expected to make money from it. And while Ethereum may claim to make that argument, I can't name a single ICO today, maybe one, that can actually get away with that. Everyone is buying these tokens not to use the product that they're offering, but to flip these tokens for money. And that is one of the three aspects of the Howey test that makes something a security, in which case they should have registered as selling you a security because you have an expectation of profit. And that's where the problem comes in. It doesn't just turn a person into a hobbyist, crowdfunding, it turns a person into an investor in that company looking for a profit.
Do you think that when it comes to guidance from the government, that the government will eventually provide guidance for how to do an ICO or what they need to disclose to people to do an ICO in order for it to be kosher with everybody?
I honestly don't know. This is something the government should have done over a year ago. It was very obvious over a year ago. It was very obvious to me and some of the security lawyers that I've interviewed at the time. An ICO should be no different than an IPO. They're exactly the same. Like Ethereum should have been legally in trouble long before the DAO should have. The DAO should have destroyed Ethereum from a technological perspective, but it didn't. And the regulator should have destroyed Ethereum from a regulatory perspective before the DAO because it was obvious, and they didn't. Where is it going to go? I have no idea. Tomorrow on our law show, we're going to discuss an ICO that has been deemed a security, the first ICO that was deemed a security, but it was the company that the ICO is not being traded right now. The token is, it was a scam. It was an obvious scam. So it's kind of too late. What happens? They need to start making this ruling on popular ICOs. What are they? It doesn't do anybody any good when the company never had a product. All they did was ICO to get the money, and then they deemed it was a security. Well, yeah, that's obvious, but what do you do now? It sounds like the government is going to admit that Ethereum was a security, but it isn't anymore, which makes no sense to me at all. But that's a different discussion. And it's all about the advisors. Like, I'm looking at the people speaking in front of Congress. I'm speaking at the people advising the SEC. I'm speaking at the influencers that are going to be, what do you call them? Like lobbyists in the government. And a lot of these people are so financially invested in these ICOs that it's now has become like for their financial well-being to get the government to make the rules on ICOs and the soliciting of people's money as loose as possible. And and this is going to be a problem because if these scammy ICOs suck all the value out of people's pockets in the economy, the next bubble will make the ICO bubble could potentially make the 2008 financial crisis look like an appetizer. Like the bubble that you should be worried about to take out America is not the U.S. currency bubble. It's not the dollar. It's not the U.S. bond bubble. It's not the U.S. debt. Potentially, it could be the ICO bubble and the complete annihilation of all 100 years of laws that kept money with the middle class while all of these scammers come in and suck all that money out and just destroy it.
Do you think that there ever could be an honest ICO or any ICOs that could potentially be honest if they had a product or?
Yes. Like, again, I give one example. These are very good questions. I'll give you one example. This is not a recommendation to buy the ICO. I think it's an absolute terrible investment. But even though it's a terrible investment, it doesn't mean that it's not legit. Kind of like Litecoin, right? I think Litecoin is a terrible investment. I think Litecoin is pretty much useless. Same with Monero. I think they're terrible investments, but they're not scams. They're just, there. So I know of one ICO, at least this is what their white paper said. I heard that they didn't actually do what the white paper said, and I heard it's a little more scammy than that. But I'm going to go off of the white paper and what the creators of the ICO did. I'm talking about the BCAP token. It's probably the only ICO that I have seen in the hundreds of ICOs that I have looked at that passes my smell test. Here was the initial plan. We are raising $100 million for a round of VC funding. We're a professional VC. We invest money in companies. This $100 million, we're going to invest in blockchain companies. But they raised $90 million from qualified investors, rich people, the legitimate way. And the other $10 million, they used Regulation S and some other regulations. And they said, hey, we want to open up 10% of this VC round to, people in third world countries. So here's what we're going to do. We're going to allow the world to invest in our round that we're going to invest that money in speculative companies in a blockchain space. So we're going to sell 10 million tokens. Each token represents $1. And for every dollar that you give us, we will add that dollar to the pool of the 100 million. That money is going to get invested in a bunch of companies. And then you can get a return on that dollar. But that's a kind of a legit thing, right? Because all that ICO does, it does two things. First of all, it allows people to invest in very small increments with a VC. And second, it allows you not to be locked into the VC investment, because that ICO is openly traded on exchanges. So you don't have to sit on this investment with the VC for years. You can sell it after a couple of months to someone else. So obviously, if the VC is performing well, what should be the value of the ICO token? Well, the underlying dollar plus or minus the return on that dollar based on how it's being invested. If they've invested the money wisely, that dollar is earning a positive return. If they invested that money poorly, that underlying dollar could be worth less than $1. On top of that, there may be a premium, a little bit of a premium, based on the fact that you can easily get out of this position. So it's kind of like the ease of transfer of this position should give it a little bit of a premium. So my best guess, let's say the average VC has a good VC can beat the S&P 500. So let's say that dollar made a 10% return a year. This token's been around for maybe a year and a half. Let's say it's been around for 2 years, right? Then that token should have made maybe 20% if the money was properly invested. Add maybe another 5 or 10% because it's liquid and you can sell in and out of it, right? So it should be worth maybe $1.30 right now, but it's worth over $2. So clearly it's overpriced, right? Because of the hype. But that is probably the most legitimate case of using an ICO I can think of, because the money wasn't used to fund some dream. The money has an underlying base, an underlying value, and it needs to be traded in a decentralized way. Maybe you don't need to know who owns this piece of a VC. It's a very small piece. But if someone wants to cash in this token, they can always call the company and say, hey, give me my money, take your token back. That's perfectly possible. And if the token is ever trading below its par value, the company is like, oh my God, free money. We'll just buy them back ourselves. We know how much this fund is returning. So that is pretty much my only legitimate use case for an ICO. But I wouldn't even call it an ICO. I would just call it, the ease of transference of a piece of something underlying it. So if you're building something with that kind of a mentality, sure. But don't give me some kind of nonsense that you need this token to use the product. If that was useful, we'd all be paying Amazon stock for things on Amazon. And that's ridiculous. The idea that you have to use Ethereum to fund the smart contract is silly. You should use any currency you like. The only reason why we have Bitcoin is because for two reasons. One, Bitcoin itself incentivizes, the security of Bitcoin. And because Bitcoin itself is decentralized money, it has to move on its own network. So Bitcoin is a utility token for the blockchain. Smart contracts you should be able to pay for your smart contracts in any currency. So if Ethereum succeeds in giving smart contracts, somebody else will do it and allow you to use any currency you want.
Okay, thank you.
Okay, time for a couple more questions probably. So you might want to come up a little closer so we can hear you.
Yeah, it'd be great.
Hey, John. We're talking about ICOs, and I'm curious if there's a model that you've run across where people will consider raising money using Bitcoin as a token, and what that model might be. So if you were to build something into the Lightning layer, for example, and give functionality, open source project built into the Lightning layer, a way to drive money toward that development.
Well, I'm not sure I really follow the question, right? Even right now, people are funding their projects with Bitcoin. Every one of these ICOs is being funded with Bitcoin because Bitcoin, like the only reason why they're being funded with Ethereum is because they're being built on Ethereum, because the Bitcoin core developers weren't dumb enough to allow this kind of nonsense on top of Bitcoin, using up its blockchain, using up the valuable space in the blockchain. Like you can't build an Ethereum node. There's too much data. Like the Ethereum is not sustainable. It's not scalable. So the Bitcoin core developers weren't going to go there. The only reason why all of these ICOs are accepting Ethereum is because they don't want to, it'll be harder for them to solicit people if those people had to now use two different currencies, right? So they're soliciting in Ethereum because they're building on top of Ethereum. But a lot of these ICOs, they'll sell it to you for Bitcoin. They're just trying to trick you into giving you something that you can speculate on so they can get your money. What you're talking about is basically a volunteer project. Hey, I'm taking donations for this idea. Please donate. But the moment you give people something in return, something liquid in return that they can then resell for a profit, I don't understand how anyone in the regulatory space doesn't see that as a straight up violation of the Howey test from the 1940s that specified what is an investment contract, aka what is a security.
Yeah, I see. You just build it. You don't worry about tokenizing.
Right. Like that's the thing. Satoshi didn't give anybody anything in return, and that's the difference, right? Satoshi built Bitcoin. He didn't give people anything in return. Meanwhile, Vitalik built Ethereum, and he gave people Ethereum in return for their Bitcoin. And that's where the problem comes in. He gave people Ethereum that he created. He didn't even create it. He gave people the promise that he will create Ethereum in a year and then gave them the Ethereum a year later. Now, you are all lucky that he even managed to create Ethereum, because that could have went the way of Tezos.
Cool. We got time for maybe two more, but I want to get the floor to our guys here. So,
yeah, can you hear me there, Tom?
Yep, this should be good.
The other day you had Charles Hoskinson on, and he talked about the Ethereum ICO and said that they had good counsel there for the offering. They had lawyers look at it. Do any of the lawyers that you talk about going after the lawyers? I mean, wouldn't it be prudent to start with those people's ability to practice law from a starting point? I mean, could those projects go after those lawyers? If they get trouble, I mean,
So I did. Me and a securities lawyer discussed it, and here's the problem. A lot of these projects got the advice of some of the biggest law firms that we have in the US. And it's very hard for them to go after these law firms, right? Because a lot of these law firms represent some very important other clients around, like in America, vital to the US economy. They may also represent even some of those congressmen and SEC as well. So it becomes very difficult to go after them. However, if the bubble blows big enough and crashes big enough, then in the aftermath, anything is possible, right? Like everyone thought that the investment banks were untouchable. Well, 3 of the investment banks are no longer with us after the 08 financial crisis. Goldman Sachs got a bailout, through the back door of all the, the bad stuff that they did. They weren't held accountable at all. So it depends how vital you are. And yeah, it's going to be very difficult to go after some of those lawyers. Now, if those lawyers end up advising some of the more fraudulent ICOs we have, then there could be something. But we'll see. We'll see. Like, I don't know if Ethereum is going to fail technologically first or from a regulatory perspective. I was hoping it would be Ethereum would, end due to a regulatory perspective. That's the best way for it to end, because it would end sooner. It looks like the regulators are not going to do anything about Ethereum. So we can take that off the table. The next best thing for the way Ethereum should fail is technological, because they can't scale. The sooner they can fail technologically, the earlier this nonsense ends. If Ethereum is able to last technologically for a longer period of time, it will eventually fail economically. It will fail from a perspective where people will realize that you don't need decentralization in anything Ethereum is actually doing other than the solicitation of money. And if that's how it fails, eventually, it'll be too late, because it'll fail in a way like the tulips failed. Like, eventually people realize that it's nothing but a Ponzi and it's useless. And then it just goes to zero. So if it doesn't fail technologically in the next year and a half, this bubble could grow to unreasonable levels in the world of ICOs.
One more question. Yeah, it's probably our last one. I don't want to keep it too late.
Do you, so let's say somebody crowdfunded something that was a collectible, like with the expectation that the item that they would be getting is going to has some sort of rarity and can be redeemed in the future for more than what they initially paid for. Would you consider that to be a security? And do you also believe in digital collectibles potentially?
The digital collectibles is going to be very interesting, right? Like, a couple of years ago, I spoke at a conference called Digital Rights, and it was mostly like music industry focused, and they talked about the blockchain for the music industry. And I don't really see any use case for the blockchain in the music industry other than a potential collectible, right? And that's where, let's say, an artist has a cryptographic digital signature on 100 MP3s of his song, the first 100 MP3s that he's gonna, release to the world. And if you can get your hands on one of these 100 MP3s with his cryptographic signature, you have one of those 100. But that means if they're on a blockchain, like Bitcoin blockchain, that means they could be stolen. You can lose the password to them, and then you can't play the song anymore, and now it's useless. I don't know if anyone's going to want this. I don't know what kind of a value it will have. But people collect people's, handwritten signatures. So maybe in 100 years, their cryptographic signature may be just as valuable as their handwritten signature. In the case like that, where you're giving somebody a collectible, again, this could be a court case one day, and it becomes, are you in violation of the Howey test? Are you collecting money from people as a common enterprise, and that person has an expectation of profit based on something that you do. So if the person giving back that collectible, and they even hint or imply that this will make you money one day, they're in violation of the Howey test. It's a very tricky thing. And the world has been trying to get around the Howey test for years. So there's the thing, right? Are you buying that collectible, that collectible that you can resell with an expectation of profit? And you can say, hey, what about comic books and baseball cards? Well, the moment that you buy it, you don't really have an expectation of profit. And it's going to be interesting, right? Like if this, if the ICO space gets bad enough, something like baseball cards, something like comic books, they could be part of potentially, I'm not a lawyer, but I wouldn't be surprised if they would need specific exemptions saying that, hey, baseball cards are exempt, comic books are exempt, right? Whether you can use history or whatever, stamps are exempt. So there, I don't know, like, right, this has never been a serious problem before, but it could be in the future. So we'll see what happens. But that is a good case if you start offering something like collectibles. But obviously, they're not offering collectibles. They're pretending like this token is going to be used in the operation of the project, but you can instantly resell that token for a profit. And these guys do have lawyers. They do have advisors when they sell the ICO. And the first thing a lawyer will tell them, if you are caught in a public way, either in a tweet, in a message, somebody recorded a conversation with you and a friend, a public interview, if you are even hinting that you are selling something that could be resold for a profit, you will get nailed for unlicensed, unregistered security sale.
Thank you. Okay, well, if there's no other questions, I don't want to keep Tone too late. It's 9 o'clock his time.
No, it's fine. It's fine on my end. I'm home. I do have to finish watching the Senate hearings. Though, hey, guys, I'm not a lawyer at all. I just spent enough time talking to lawyers, so I kind of have an idea of what it is. So don't take this as legal advice, but definitely talk to a lawyer and just be careful. Watch the lawyer show. We'll have it tomorrow. I still got to finish watching the second Senate hearing for our show tomorrow to talk about it. From yesterday's Senate hearings.
Well, if there are no other questions, I want to. Oh, yeah, one comment, question.
It's a Bitcoin meetup. I haven't talked about Bitcoin.
Bitcoin is boring. No one is talking about Bitcoin anymore.
Okay, so you've been recently short-term bearish. People have been piling on you pretty hard for that. I know you're long-term bullish. What do you think are some near-term bullish indicators that you might be paying attention to? There's like the ETF noise coming up. What do you think about that now?
Sure. Right. So I am long-term bullish. I was medium-term bearish, and I was short-term bearish. So I'm no longer short-term bearish. I'm more neutral to maybe a little bit bullish short-term. I think we can go up to 8,300, but I'm still medium-term bearish. I still think my $5,000 most optimistic price target on the low end is still coming. It'll come a little later, but I still think it's coming. Now, the ETF news is interesting. There's two things here, right? There is what is the SEC going to say? And based on what they say, what is going to be the effect on the price based on what they actually say? Okay, so in my opinion, the last time the SEC had to make a public statement about the ETF, I gave it a 5% probability that they're going to approve the ETF. This time around, I will give it a 20 to 25% probability that we're going to have an ETF. Sooner or later, there will be a Bitcoin ETF. I just think that it's going to be a little later than sooner. But it's definitely a higher probability now than back then. Okay. Now, is there speculation? People are always over optimistic. Is the price of Bitcoin rising right now because people are optimistic about the SEC potentially allowing the Bitcoin ETF? Of course, right? Because even with the 25% chance that I'm giving it to give us an announcement of the ETF, that's a 25% chance that it's going to be good for the price of Bitcoin. So I'm not surprised that Bitcoin is rising a little bit based on the ETF announcement coming on August 10th. So if the price of Bitcoin rises high enough into the announcement, and I think anywhere above $8,000 is high enough, no matter what they say, there will probably be a dip. Because even if they approve the ETF may not be coming for like 6 months to a year. Like it's not going to be ready on August 11th. It'll probably take some time to launch the ETF. So no matter if the price of Bitcoin rises, it's going to be a sell the news event, in my opinion. It might even start dipping before the announcement if it goes up too high. That's what usually happens. That's what happens with the halving as well. So you can look at it that way. Is having an ETF going to be good for the price of Bitcoin? Yes. Is having an ETF good for Bitcoin ecosystem? Maybe not. I don't really like, by having a Bitcoin ETF, that's a good chunk of Bitcoin being locked up for the sole purpose of speculation and not for the purpose of, commerce. And in addition, that's a lot of Bitcoin being locked up by a government entity, again, at risk of confiscation. So not a good thing either. The only good thing that comes from a Bitcoin ETF is that it makes Bitcoin more legitimized, right? It's kind of hard to blame gold for only being used by criminals when there is gold ETF and gold futures. And, so it helps. It helps Bitcoin. It helps Bitcoin image to have a Bitcoin ETF. But does it help the Bitcoin ecosystem in anything other than raise its price by speculators? Not really.
I agree.
When you trade, do you use any bots ever?
No, for two reasons. So the trading that I still do is pretty nuanced. And while it's possible to write a bot, there's two problems here, right? If you're going to write a bot, if you are capable of writing the bot, you can try. If you're not capable of writing the bot, you got to trust someone else to write the bot. And that's a big problem. Because if you really have a profitable strategy in trading, no one should know about it but you. Maybe your kids, maybe whoever you're going to pass it on to, right? So the moment you start programming a winning strategy, all of a sudden somebody else knows it. And now your strategy is at major risk. So the strategy that I have, like two other people know it in the option space. And we don't tell anybody what it is because we don't want people to dilute our winning strategy of trading. Can we write the bot ourselves? The answer is maybe. But if you have a winning strategy, that strategy is usually so complicated and so nuanced that you always need some element of discretion. And this is my problem with bots. Your bot does not have discretion. Your bot will treat an asset closing at a certain time, 1 penny different than it should. It'll treat it the same as trading $1,000 different than it should. Like it doesn't separate. And I believe that trading requires so much nuance that anything you program will eventually fail. Other than very simple strategies, like you're trading the moving average crossover, something simple. And if you're just lazy to do it manually, you can program that, but you have to watch your bot. Most of the research that I've read on bots is that the most successful bots that had like a 90% success rate over like even like a 5 or a 10-year back test ended up barely above 50% the moment they went live. I just don't know. And I've never had any good experiences with bots. And anyone that has isn't telling you. So it's almost like a chicken and egg situation. But no, I have never used bots in my trading.
Cool. Well, I think
I'll ask one more question
Sure.
on the bot thing. Do you think people are using algorithms to trade Bitcoin?
Well, that's the thing, right? Like a lot of the algorithmic trading and a lot of the high frequency trading, a lot of the bots, like they don't give you details. Someone is like, this company is the most successful bot trading there is. They could just be the middleman. They're just a broker. They could be picking up pennies, skimming pennies. Like all of these high frequency traders, they were just front running positions. They're just so quick. They see an order coming in from a big hedge fund. They're just so much. They're literally tapped in to the exchange. They're next door. They're just front running that order, right? That's a different kind of a bot. I mean, I'm talking specifically about trading strategies that involve either like arbitrage strategies or involving direction. I mean, I do direction neutral trading, but they're not micro positions. So a lot of these bots, they're market makers. They're matching, optimizing buy and sell. They're taking the difference in those. So that kind of bot trading, yeah, absolutely. You have to do that with bot because a human is incapable of that kind of trading. But anytime a human, if it's the kind of bot trading where a human can also do it, I would rather go with the human. I don't think the bots can compete. But when your bot relies on, seeing everything and matching all over the place, or just light speed trading, then your only option is a bot.
Thanks. Thank you. Well, I want to thank you, Tom, for joining us. And I encourage everyone here at Seattle, if you haven't followed Tone before and you want to learn more about markets, I'm not a trader, and I've found him to be very informative. And it's just good to have his take on things. He's been watching the space from a high level for a long time. So it's very refreshing to have him as a resource. So I encourage you to follow him a lot. Thank you very much for joining us, and I'm sure we will see you out and about.
Yeah, no, guys, thank you for having me, and a shout out to CoinMe ATMs for hosting you guys, providing you a space. That's great. I gotta come up to Seattle one day. One day I'll make it, I'm sure.
Yes, you gotta get up here. Make it in summer. All right, guys. Thank you very much.
All right, thanks. We're gonna end the live stream, guys. Hope you guys enjoyed that on the live stream. Looked like everything was good.
It's nice to meet you.